Welcome to the podcast that fuels the minds of ambitious business owners. Fuel provides business owners like you with easy to digest, bite-sized learnings to help grow your capability and keep you on track to achieving your version of success. Our expert speakers will draw on their own experiences and share valuable insights into areas that matter most in business.
Hi, thanks for stopping by. I'm your host, Paul Hobbs, and on today's podcast, I'm joined by Sam Ogle and Jess Tietjen, both directors at Plusmore Hawke's Bay, and we're going to fuel your minds on all things cash flow. So guys, tell me about the common strains or issues or problems that businesses have with cash flow.
Sure. I think one of the first things is probably understanding cash flow. And when I say that, I mean understanding the difference between your bank statement and your statement of profit and loss, or your accounting, if you like. So put simply, cash versus accounting. People really struggle to understand why their bank account doesn't represent the net profit they're showing on their net profit, on their profit and loss. Sorry.
So then what is the difference? Can you give me a nutshell definition of what the difference is then?
So I guess the difference is all about timing. So you might issue a sales invoice which reflects well on your profit and loss. So you're making sales and you've got a profit at the end of the day. However, it's all about getting that cash in the door. And a lot of businesses really struggle with what we call the cash conversion cycle, which is effectively the time it takes from investing in, say, your inventory or your employees' time and converting that into actual cash sales. So from the time you invoice, you just need to get that cash in the door faster. So there's various tools that we can talk about to sort of get that cash in your bank account faster. But I think that's probably one of the key issues is just, cash.
And I think second to that would be probably understanding those expenses or those outgoings that aren't expenses. So when we look at someone's expenditure, they've got entertainment, they've got things like interest, they've got things like rent, etc. But then in their actual cash out, they've still got principal payments. Those aren't expenses, but it's still cash leaving your bank account. We're buying assets. Well, they're not expenses, they're assets, but they're still leaving your bank account. So it's making sure that we have that little bit of education to understand or reconciling back between, as I say, your cash versus your accounting.
And so that's where we sort of come in and perhaps do a cash flow statement as opposed to just a profit and loss and a balance sheet. And the cash flow statement sort of ties those two reports together and gives you a true indication of where your cash is going rather than just the profit and loss items, as Sam said.
So you talked about some of those areas where cash is going. What are some of those areas where cash does sort of seep out and go in different directions and it's not being sort of controlled or acknowledged perhaps?
Stories.
Yeah, that's exactly we're on the same wavelength. But yeah, like we're talking about, and we're talking to our audience today, which are the SMEs, your small to medium sized enterprise, and they typically are owner operators. And what that sometimes means is it feels like we get confused between our own personal bank accounts and our company's or our business's bank account. And so therefore drawings. So some people will basically live their life through the business and they find that they struggle to then understand why it's seeping cash. And it's typically because it's got a new world, every other day. It's got cafe, it's got this, it's got home power paid for. Or equally, we have some people out there who literally look at the bank account and just take what's left and don't understand what the next 30 days might look like in terms of cash needs. They're just really taking a gamble in terms of, to Jess's previous point, collecting from their invoices on time.
Yeah, and
is that quite commonplace? Is it as commonplace as it might seem? That people are just drawing on those two scenarios you've talked about there?
Yeah, definitely. And then that becomes a real issue at tax time because of course, those dates sort of, come sort of 3 times or 4 times a year or GST periods. If they're just taking cash as it hits the bank account, then all of a sudden they've got to pay this massive GST bill and they're like, ooh, where's all the cash gone? So forward planning and forecasting is super key when it comes to cash flow.
Yeah.
And I guess discipline. So how do you set those strategies or boundaries or parameters that you sort of work in to get something that's much more workable and sustainable?
Yeah, and I think there's an acknowledgement there too that drawings are okay. They just need to be planned. So it's more about, and to plan those drawings, we actually have to understand, maybe not to the nth degree, but we need to understand what the client's home life or home budget at the very least is like. It's none of our business what they spend their money on, but we kind of need to know what they probably need to take from the business to make sure that it's actually sustainable. So that's probably one of the key things in terms of that discipline. If we're doing a forecast, then we're planning. So that's a great discipline already, but as part of that planning, we need to know what's required to be taken home as well.
Exactly. So, I mean, people go into business to sort of maintain the lifestyle that they like. So sometimes it's quite good to kind of work backwards. So think, okay, well, what do I need to maintain that lifestyle or achieve these personal goals? And then work backwards to then work out, what your sales need to look like or what that cash conversion cycle needs to be for you to actually have that cash hitting the bank account when you need it.
So they need to be pretty honest with both themselves and, I guess, their advisors.
Oh, absolutely. Like, as I say, we sound like we're kind of being critical. We're not. We're absolutely not critical. Life is life. We fully get that. We just got to make sure we plan for it because, that business feeds potentially many mouths, not just the owners as well. So there is an element, I guess, of accountability. Yeah. Excuse the pun.
It can be a little bit confronting as well. It's kind of like when you go to the bank, you have to fill in that form with all your outgoings. It's the same sort of with us if we were doing a cash flow forecast exercise. It's you really have to make sure that you cover all bases and be upfront with what you're doing in terms of what your drawings will look like.
So if we set aside owners and their drawings, what are some of the other risks that are sort of into that cash flow that impact on cash flow?
Yeah, I would probably add to that finance. So, I talked about before about buying assets out of cash. When we don't buy assets out of cash, in other words, we put them on finance, either with a bank or a second tier or worse, third tier, or kind of Tom, Dick, and Harry who'll give us some money. We need to make sure that we allow for those repayments as well. So that's another little area that can show a bit of slippage. The other area of slippage, to be perfectly honest, is all about collections if you're a non-cash business. So we're saying cash a lot. So a cash business, for example, would be hospitality. They take it there and then at the bar. A non-cash business might be a contractor or someone in construction where they're raising an invoice with a 7 or 30 day sort of scenario in terms of payment.
So what about this? So have you guys got any examples of where you've seen some of these common pitfalls take place in businesses you're dealing with?
Sure. So I've got a couple of clients that are sort of one-man band tradies, so builders, electricians, plumbers, and they struggled with getting cash in the door faster, like we've just spoken about. And one of the things that one in particular just recently did was enable the payment services feature within their accounting software. They, in this instance, use Xero. So what you can actually do is enable this feature. It is a fee to use it. I think it's a per transaction fee, but it means that when you send an invoice out, there's a pay now button. So they do the job, they send the invoice out, hopefully sort of within the 5 days of doing the work, ideally on the day. So it's at the front of their customer's mind. And then once they receive that invoice via email, the customer can then just really easily click pay now, chuck in their payment details, and the invoice is paid on that day. And that quite commonly sort of is paid before that due date, which is an awesome way to just get that cash in the door faster, making it easier for customers. That's the key. Because it is a bit of a hassle having to, copy the bank account number and chuck it in your bank and all that kind of stuff. So it's just making it as easy as possible for your customer to pay you faster.
Are there any other little that seems almost incredibly simple sort of strategy. Are there other ways that you can get sort of payments come through the door quicker?
Well, I think at the other end of the scale in terms of size of business, if we start thinking about, and it's particularly relevant to the whole of New Zealand, we all love houses actually, construction, I guess it's about creating that right to start with before we even talk about the actual payment term, if you like. And so when I say right, I'm talking about things like price escalation clauses. I don't want to go too deep into this, but you want to make sure you've got that right to invoice. I guess my next point I'd make is over and above, say, price escalation and or capturing variations, it's about actually raising that invoice really quickly afterwards. I mean, it's the old saying, you don't ask, you don't get. So the sooner you ask, technically, well, in my theory, the sooner you get.
So do some businesses have a real lag in getting that invoice out? I mean, what are some of the examples or sort of things you've seen in terms of getting invoices out?
Oh, I guess just being time poor. So if your schedule is just chocker and then they have to go home and do the invoicing at the end of the day when you're just extremely tired, they sort of will put that off and do it the next day or the next day, and it kind of just, prolongs things even further. So in that instance, I guess there's a few issues there. I mean, scheduling's one, but secondly, you could look at maybe getting a bookkeeper to help you to get those invoices out timely.
Yeah, I think it's about creating habit, or as Jess has pointed out, put some safeguards in for yourself. If you know where your own weaknesses are, then just deal to them. But
outsource.
I think the main thing is that, particularly on those examples that I gave, it's about not waiting to the month end or waiting till the end of the job, because everyone's forgotten. It gets really, really messy and ugly. There's disputes. There's all sorts of things. You should be billing those as soon as the conversation's had. I think clear or clarity with the client, and then really sort of racing to get that invoice out, and they'll get it paid.
Do businesses ever get negative feedback when they just fire those invoices out too quickly, or do you think that customers sort of have an expectation that once the job's done that they should be paying?
I think it's when they fire out the invoices over and above the expected or the contracted services they've said to do, and they just fire them out and hope for the best. It's always going to be a niggle. Like, we're just human, so no one's going to pay something without understanding what it's for.
And then in that instance, it's picking up the phone and having a conversation and being upfront about the amendment or adjustment in that invoice. And most of the time, everyone's happy if they've had that conversation, but no one likes surprise invoices that are double what you expected. So clarity and being transparent is key with your customer.
I think we can't not discuss COVID-19 and the impact that's had on various businesses. Has it been universal across the board? Because certainly some sectors have talked about having no money coming in the door, and others maybe that's not the case. So what can you tell me about that?
I think it's, to be honest, there's some real highs and lows. So hospitality, for example, all over the country, particularly in Auckland, and I say this from watching from afar from Auckland, but hospitality in general, they've really been stretched in terms of their ability to open, the level of staffing they have to meet requirements. I mean, staff ratios are really important. So their wage bills are really high, so their outgoings are really high, and they've got some very tentative punters coming back. And then at the other end, again, I use construction. Well, the money was cheap, so people were just loving to build a house. So it was just go for it. In fact, people were pricing to lose on contracts, and haven't seen that in New Zealand for not in my career anyway. I haven't seen that. So that's it's really hard to answer that question, Paul. So I think it's more about being open-minded, that not everyone's had this free money from the government and have gone and done extra things with it. People have just got by on that and then have still struggled even after that as well. So really hard to sort of tell you that there's this universal sort of COVID sort of impact.
Yeah, I've certainly seen with across my entire client base those debtor days creeping up and up sort of every month following the lockdown period.
Second lockdown.
Yeah, and I guess it's just communication is key. So really sort of with all your customers, communicating with them, asking when you can expect payment, and sort of, making sure that you align your own sort of outgoings to meet the time in which it will take you to be paid. So it's sort of really nailing, there's sort of a happy medium there. So paying your suppliers and then the receipt of the invoices that you issue. So finding where that sort of happy place is for you.
Yeah, and I think, before I talked about that impact of COVID, that's been the last 2 years. What's the next 2 years going to look like? Probably the inverse, in terms of my comment around construction and those larger businesses. It's probably going to be the inverse, because the money isn't cheap anymore. People are far more nervous, and it probably is going to become much more competitive around margin and markups, etc. So.
Yeah, and I think one of the things that business owners have really learnt from COVID is the key for having a cash flow forecast in place and really knowing where the cash is going for an entire 12 months or beyond, and so they can really plan where they allocate those funds.
Which again must have been difficult in COVID, when sometimes you'd be in a chain where the people you're invoicing are also got low cash flow and it bounces in along the chain. So I guess you can't always know how that's affecting your other clients and where that's going to ripple through to you.
Yeah. I think we're going to see more and more of those ripples over the next 12 to 24 months. There's definitely going to be some big ripple effects. Banks are asking a lot more of people. I think there's going to be some real mindset and habit changes that are going to be required of pretty much the whole of New Zealand business, small New Zealand business, going forward to, I guess, make sure that we don't cash handicap ourselves.
So if you were to sort of give a couple of sort of final points on how I guess businesses can insulate themselves or best manage cash flow issues, what would those sort of key points be, do you think?
Cash flow forecast. So talk to your accountant or your advisor and sit down and really nail down what the next 12 months are going to look like. And to our point earlier, really nail down what those drawings are going to be as well, because that is where we see, the most leakage.
Jess, Sam, I'm sure that's advice that all business owners will be thinking, thank goodness for that. Great, thanks for joining us.
Cheers.
Thank you for listening to Fuel. Make sure to follow Fuel wherever you get your podcasts.